Awesome. Okay, we are now live on Facebook. So welcome everyone. Good evening. Thank you so much for joining us. For those of you who are joining us on Zoom, you can feel free to chat in any questions you might have in the chat box or the Q&A, and I'll get those queued up for Carla and our guest Michael tonight. If you're watching us on Facebook Live, feel free to comment on the post and we will get those queued up as well. So again, thank you so much for joining us and welcome to this evening's town hall hosted by Carla Bailey-Smith. Thank you, Carla.
Thank you, Kelsey. Our guest tonight is Michael Seeborg, who is a professor of economics at Illinois Wesleyan. Michael, I'm so glad you're able to join us tonight. The first thing I want to talk about is, or ask you to talk to us about, is how increasing wages supports a healthy economy, and also address the concerns of business owners who feel that an increased minimum wage is too much of a hardship for them.
Hi, Carla. It's great to join you in this virtual town hall meeting. And I think that your question is a timely one on wages in Illinois, since the minimum was increased yesterday to $10 an hour, and is scheduled to be increased even more over the coming years. Mm-hmm. And so what I'd like to do is just address minimum wages a little bit, and some of the strengths and benefits of those increases that we're going to be seeing. First, higher minimum wages really means more spending by minimum wage workers, and they purchase more goods and services as a percentage of their income than wealthier workers. They don't save a lot; they spend a lot, and spend a large proportion of their income. And what higher minimums mean then is more spending in the local economies, and that in turn should result in an increased demand for goods and services. So one effect of a higher minimum wage is a possibility of more spending in local economies by minimum wage earners. It also, of course, helps families who are in poverty or near poverty in elevating their standard of living, and that's an important concern. We know that in recent years, poverty rates have increased in Illinois, and as they have in the country as a whole. And to the extent that families have minimum wage earners in them, then the increase certainly is going to help get them out of poverty and to have a better standard of living. So families benefit. Higher minimum wages, though, do raise the cost of producing goods and services, and particularly for employers who hire lower wage workers, and there's some concern about that. What effect will a higher cost of production have on employers, particularly small businesses who tend to pay sometimes minimum wage? However, most of the economic studies that I've read about increases in minimums show that the effect of an increase in the minimum wage on the level of employment is pretty small, actually. It does have some negative effect on employment of lower wage workers, but it's a small effect from most of the studies that I've seen. And what I think the best way to think about that is that as an employer increases his minimum wage because of an increase in the schedule, that sometimes there's not the realization that all of the competitors are increasing their minimum wages as well. And so from a competitive perspective, costs are going up, labor costs are going up a little bit for everybody. And so that doesn't put the small business at necessarily a competitive disadvantage in the marketplace. So those are some of the effects. I think there's the positive effects on families that receive the minimum. There's a minimal reduction in employment of minimum wage workers, and there's a minimal effect on employers of those workers. So I think those are the main things there. Kelsey, if you could show the first slide on the minimum wage. I've got a schedule there. There it is. This basically presents the minimum wage schedule for Illinois. And what you see on this slide is that yesterday, the minimum wage increased in Illinois from $9.25 to $10 an hour. And that under the current legislation and for the minimum wage in Illinois, every year the minimum will go up by another dollar until it reaches $15 in 2025.
Right.
And so the increase is going to be relatively gradual. So that should give small businesses a chance to adjust as these increases occur. Right now, this will put us, there are only 3 states that will have minimums that reach $15 as of now. And that's, so we'd be joining Massachusetts and California in that regard. But I'm sure that other states will be passing increases in their own minimum wages as well over time. You can also see from this graph that the minimum wage for tipped workers will be increasing as well, of course, at lower rates, and that there's a separate minimum wage for under 18 youth. And the idea there is with less experienced workers, that the minimum probably should be lower because as youth gain at work experience, they're not real productive at first. And so this would still allow employers to give work experience to youth without too much of a burden.
Right. Yeah, I remember that. Debate over making sure that employers could pay 18 and under less. that was insisted upon vehemently to be part of the legislation. It's interesting to see the graph laid out like that, and also thinking about, looking at, we're not going to reach $15 an hour until 2025, and I wonder, what the cost of living is going to be by then, and is that really going to put people, minimum wage workers, in a better place, or just slightly better?
Yeah, that's really a good observation on the minimum wage. Right now, we're in a pretty low inflationary environment. The prices aren't going up very fast. We're in a stable price environment, unlike a lot of our history, and we expect inflation to be tamed for a while. But as we know from history, we can have bouts of pretty rapid inflation.
Right.
And an inflation rate of 5 to 10% can very, very quickly erode real wages or the purchasing power of the minimum wages. And so the minimum wage is not like Social Security, which is adjusted upward automatically to account for inflation. It's indexed for price increases. So if you get inflation, then you automatically see increases in Social Security going out to retired workers. That's not the case with minimum wages, though, and what we've witnessed over the decades is sort of a deterioration in purchasing power of the minimum wage, even though you have occasional increases in their level.
Yeah. Well, that point leads me to our net worth calculator. So I'm going to ask Kelsey to show the blank net worth calculator link, and ask Michael just to explain what net worth is, and we'll talk about some numbers and how different people are affected. So the one that's shown, I had started to fill out, so that's why it says 7% at the top. So Kelsey, if you click on your assets, then that's liabilities. Oh yeah, there's assets. Okay, so sorry, yeah, assets. So then Michael, go ahead and explain how we get, why some people have wealth and what we mean by wealth, and why some people do not have wealth.
Okay, that's a great question. And really what wealth is our personal net worth, which you get at with this, with tables like this. It's our total assets. And we all have some assets, maybe a car or some furniture or clothing or whatever we own. It's total assets minus what we owe, our indebtedness. And that's
Right.
our liabilities. So you see on your net worth calculator, the assets are listed towards the top. You know, you own some real estate, perhaps, the value of your home, personal property like cars, investment like retirement accounts, and then cash that you might have in your checking account. But then you also have liabilities, kind of what you owe. For some people, it's mortgage payments.
Right.
It's loan on debt. Student debt is getting to be a huge liability for a lot of people these days. As tuition costs go up. Auto loans and credit card debt, of course. And those are our liabilities. And so you take assets minus liabilities and you have net worth. And it turns out that a remarkably high percentage of Americans have zero or negative net worth. There's much more inequality in terms of net worth than there is in terms of income distributions.
So I'm going to be very brave, and I'm going to show an average, a quick net worth calculation of my own, and that's just me as an individual. I rent, so I do not own property. I have a car that's paid for. I have a little bit of a 401k from when I was a member of a union in New York City. I have a little bit of stocks when I was working in New York and working for ABC television, and I have Disney stocks. I also have at least $50,000 of student loans. And one reason that they're so high is that I pay income-based repayments. And I have actually watched over the last 2 or 3 years, because I'm making income-based repayments, I've watched my student loan principal go up rather than down. And another liability that I have is credit card debt. And I can tell you that at least $800 of that credit card debt, in one go is something like brakes and new tires for my car. That's one example of credit card debt. Sorry, what did you say?
Things that you really need.
Things that I really need. Also, I'm a self-employed person. And sometimes I might have a week or two without income coming in. And I'm the one that goes out and buy groceries. And, if you don't have any cash in the bank, it's very easy to use a credit card to buy groceries. It's very easy to use a credit card to buy gas. and I do that, and I have done that, and that builds up over time, and it's really hard to catch up once you get a paycheck coming in again, because then you still have your student loan payments, you still have your credit card payments. So it's really hard to dig yourself out of that once you get into it, and it's even harder for minimum wage people.
That's right. That's right. And the net worth graph that you just had up there is so typical for so many Illinoisans, and not just working people, but small businesses will often find themselves with negative net worth during the early years, and it often sometimes will lead to failure. The good thing about your graph is that it's trending upward. And so this is not a graph that we want, not a curve that we want to flatten. This is a curve that we want to keep going up, unlike the coronavirus curves. But the idea is to have personal policies and hopefully public policies that can support people in moving that curve upward. So although it's still negative, it's moving towards the zero, and then it would be positive, particularly when that the student loans are paid off.
Right.
Then suddenly net worth becomes positive, and so I think it's a very typical a kind of scenario for so many Americans and so many Illinoisans, and should always be in policymakers' mind is how do we increase net worth? And one way to do it for people with negative net worth is to increase income.
Right.
And the minimum wage, of course, would help low income workers in that regard.
Right. Right. Yeah. And you said something before about the fact that Social Security has, I forget the terminology. The federal government has adjustments built in for Social Security to adjust for inflation, but there's no federal. So first of all, we don't have a federal minimum wage that reflects our actual cost of living. You know, that hasn't kept up. That's very clear that hasn't kept up. But then the other thing is, we could encourage our federal legislators to, mandate that minimum wage also be adjusted for inflation.
Yeah, an indexed minimum wage would at least assure that the purchasing power of that minimum would be maintained over time. The federal minimum stands at $7.20 per hour, and so it wouldn't affect Illinoisans, because our state minimum supersedes that, and is greater than that at 10. And so if the state minimum were to be indexed, and that would be a matter for the legislature to take up.
Okay, so an individual state could look at indexing the minimum wage to adjust for inflation?
They could. However, I think with the schedule for the Illinois, we saw pretty substantial increases, $1 per hour per year. And I think that would cover inflation and then some in the foreseeable future.
Right.
But if you set a single minimum wage, let's say at $10 an hour, whatever you want the minimum to be, or maybe $12 an hour, and then indexed it to adjust automatically for inflation, then the legislature wouldn't necessarily have to revisit the minimum wage issue frequently, because we're maintaining the purchasing power of those dollars.
Right. And something you said earlier really sticks with me, where you said that lower wage earners, whether you earn a minimum wage or maybe a bit more, is that we actually spend more of our income on consumable items.
Yeah, that's right.
Like the food and the gas and I mean, I live paycheck to paycheck, so that's, I go grocery shopping, I put gas in the car, I pay my bills, and
that's right.
There's not much left after that.
But for the economy, that's spending for goods and services that are produced usually locally, or many of them locally, and it does stimulate the economy. The bad thing for the individual, and perhaps the economy in the long run, though, is that when you're purchasing necessities, you're not building up assets in that balance sheet that you showed before.
Right.
And so
right.
The trick is to help lower income people get to the position where they can start acquiring assets and wealth, positive net worth. Yeah.
Yes. And finding ways to encourage people at a much younger age to start making investments. I know that in the I'm not sure what's available here, but I know that in the UK, when you have a child, because my child was born in London, that as soon as he was born, the government opened an account for him, and there was, if I put in a certain amount every month, the government would match it up to a certain amount.
That's really a good point.
So it's an incentive to start a savings account for your child.
That's right.
So that's something that I don't think that exists.
Not in the same way. In fact, in the United States, and unfortunately, the policy works the other way. So if you are able to put money, for instance, into a CD or a savings account or some sort of investment like that, then the earnings on that investment is taxed.
Oh.
So there's actually a disincentive built into
right.
for young people to save, because some of that might be taxed.
Yeah. And then another thing to look at, which I will be talking about more in depth in a few more weeks, is housing, and the fact that a lot of us, myself included, my family did not have money to give any of their 3 children to help with the down payment on a house.
Right.
And making home ownership affordable and reachable for people in lower income brackets, I think that's something that we need to take a closer look at, because it does increase income inequality and wealth inequality.
Yeah, no, I agree with that.
Yeah. Well, the next thing we wanted to talk about was the fair tax in Illinois. So the fair tax is a referendum that will be on the ballot. This is separate from any. It is not a political campaign. It is a referendum. It was voted on in the legislature to be on the ballot. The language, the structure of the fair tax was voted on. My opponent voted against this. He didn't want this referendum. I think this referendum is a really good idea. I think that it could do a lot to help individuals and to help our funding structure in the state of Illinois. So I'm going to ask Michael again to explain it from an economist's point of view, please.
Yeah, I also agree that the fair tax referendum, and it's a referendum to the Constitution, so it's actually a constitutional
Right.
changed, and it will be voting for on November 3rd. But I also agree that I support this referendum.
Mm-hmm.
Currently, in Illinois, and we're one of the few states to have this, we have what we call a flat tax system, where the tax rate is the same on incomes, no matter how much you make. It's 4.95% currently. If you make $10,000, that's the tax rate. If you make $500,000, that's the tax rate. Rich people would pay more in total, but they'd pay the same percent of their income. That's very different than the federal system that we currently have, which is a progressive system. And it's very different than the tax system in a lot of other states, most other states that have state income taxes. They also have progressive systems where higher income people pay higher tax rates. So this would, if this referendum is passed, then it would allow the legislature to create a progressive tax system or a regressive system if they wanted to, a more regressive system. But it would allow them to charge different tax rates to different income tax brackets. A year ago, the Illinois legislature actually passed some tax legislation, income tax legislation that has a graduated tax rate in it. And the idea was to, and I'll show you that in a minute on a slide, but the idea of that legislation passed a year ago was to move towards a progressive system. Of course, it couldn't be it couldn't be implemented until after the referendum on November 3rd is approved.
Oh, okay. So they wrote, all right. So they wrote the language, but it's not going to go into effect unless the fair tax amendment
unless the constitutional amendment is passed to allow for a progressive tax.
Okay.
So we're in a way getting the cart in front of the horse, but at least voters know, because of the tax legislation was passed a year ago, what the tax structure would look like when it is implemented after the fair tax referendum is passed, hopefully. So the reason for this, just a little bit of context though, the reason for wanting to move to a more progressive income tax system in Illinois is that overall, the state and local taxes in Illinois are really regressive. They put much more of a burden, much more of a tax burden on lower and middle income people than they do on richer people and wealthier people. Kelsey, I think I've got a slide that illustrates this. There it is right there, yeah. And this basically looks at all taxes, state and local. So you'd have your property taxes, income taxes, sales taxes, taxes on gasoline, and all of that. And what it does is it shows the percentage that different income groups would pay. So the first bar there shows that the lowest 20% in terms of income earners, the poorest 20% in the state would pay 14.4% of their income in taxes, local and state taxes. Some of that's income tax, some of it's sales tax, some of it's property tax, and other taxes. Okay, and then it shows how higher income groups would do until you get to the top 1%, the wealthiest people with the highest incomes. They pay 7.4% of their total income in the form of taxes, both local and state. And so what you see here is a very regressive system overall that burdens poor people more with taxes than it does the wealthy. And so what a graduated income tax would do, a progressive income tax, is it would begin to sort of flatten this curve. It would raise the taxes somewhat, the tax burden somewhat on the wealthiest people in the population, and relative to the poorest in the population. So the context for the referendum and the tax reform in Illinois is that we've got this highly regressive system that puts a higher tax burden on middle class people and the poor.
Mm-hmm.
And so what the proposed progressive taxes would do would begin to change this, to make it less regressive, to sort of flatten that curve. So Kelsey, if you could put up the next one. Okay. And this is the tax structure that would come into effect if the referendum is approved on November 3rd. Remember, the tax legislation was passed a year ago, and this was the legislation that was passed a year ago, but it can't be implemented because it's not a fixed tax rate. And what it shows is for different income ranges, it shows what the income taxes would be in Illinois. And so in the first tax bracket, which basically would be families or people filing jointly. This is for people filing jointly.
Mm-hmm.
It would be if their income was less than 100 or less than $10,000, they'd pay a tax of 4.75%, just slightly less than they're currently paying.
Mm-hmm.
Okay, so not a big change for lower income people, but a slight reduction for their taxes. And it stays in that range until incomes reach a level of $250,000. Then the marginal tax rate goes up to 7.75%. See, so this is what makes it progressive. Income levels go up, then the tax rate goes up on that additional income. For those who are making more than $500,000 a year, less than $1 million, 7.85%. For those making more than $1 million and above, this is actually a net tax rate of 7.99%. And so we see a substantial increase in income taxes here for the wealthiest among us, and a slight decrease for the poorest among us. And so this is what we call a progressive system. It would help to correct the highly regressive nature of local and state taxes overall. It wouldn't get us to parity or anything like that, but it would help correct the imbalance that we currently have in the state.
Right.
And it would raise some additional income revenue for the state too. Some badly needed.
Yes. A lot of the plans that our governor talks about really hinge on this tax amendment being passed. If this fair tax amendment is not passed, we are not going to have extra money for education and other programs like expanding broadband services in our rural areas of Illinois. Those are a couple of things that are really very dependent upon this funding structure.
The additional revenue that would come from this. Yeah, I see the main benefit though. Well, that's one benefit, is that the additional revenue hopefully would be used for infrastructure and investments that would hold and attract firms to Illinois. But the other benefit, of course, is allowing our tax structure overall to be less aggressive or less regressive.
Right.
Before.
Yeah. Well, thanks for finding and sharing those charts. It's really great, really helpful to see it laid out like that. I know there's a lot of misinformation out there about the Fair Tax Amendment. The people who oppose it are honest. They're spreading lies about it. So let's just keep sharing the truth check your sources. And if anybody, if you know, in your circles of friends out there, if somebody says, oh, the Fair Tax Amendment, they're just going to take more money from us. Well, who is us? How many people do you know that earn $250,000 or more a year? I don't know very many people who do. I'm not sure I know anybody who does. And if they do, I would encourage them to pay their fair share, as it were.
Carla, before we move on,
Yeah.
there was a quick question.
Yeah.
Perhaps you can help us clarify, would that, quote, new tax rate only apply to the money that an individual makes in that tax bracket, or would all of their income be taxed at that higher rate?
It's a little bit complicated, but until you get to the highest rate, those that make over $1 million, it's a marginal tax rate. And so your first $10,000 of earnings are taxed at the lowest tax rate. Then if your second 10,000 would be, yeah, there it is. Or the from 10,000 to 100,000, it would be taxed at the 4.9% rate. And so it's a marginal tax rate, 100,000 to 250,000. Those earnings would be taxed at a slightly higher rate. And so it's marginal. Only your additional dollar is taxed at the rate in that bracket. The exception is for those that are earning over $1 million. That's actually not a marginal tax rate, but those are earning more than $1 million would pay 7.99% on their net earnings. And so that's really quite a substantial increase for that group. Yeah, so it's a complex system, but mostly it's marginal tax rates.
Okay. And I'm sorry to the audience that I forgot to ask for questions. Usually I pause and ask for questions. Last week, I don't think we had any questions. So are there any more questions or comments, Kelsey, before we move on?
Nope, totally fine. I'll just burst in anytime.
Okay.
For clarifying that for us, Mike. That was very helpful.
Yeah, thanks. All right, so so the last thing I wanted to talk briefly about is your opinions about our economic recovery after our pandemic. What do you, as an economist and as a human being, what do you think we all need to do, and what do you think our legislation could do to help with our economic recovery?
All economists are human beings.
I guess from a humanist point of view.
but yeah, we're in really uncharted territory, aren't we? Both in the public health arena and in the economic arena. This was an unprecedented event, and what we saw from an economic perspective was in April, when COVID really hit and we had to start locking down and staying home. We saw a loss in 1 month of 20 million jobs nationally. And I mean, it was a tremendous hit. And so we've never had an experience in our history of such tremendous job loss all at once. And that makes the recession different and kind of scary. And so the pandemic itself, the public health emergency, is tied directly to the economic emergency. And my opinion on this is that we've got to get the pandemic under control before we were able to really deal with the economic recession that we're in.
Right.
In terms of the state, and state legislature, I think the best economic policy that could be pursued in Illinois right now is to really educate the public on the pandemic, and to have protocols for reopening the economy that won't invite a resurgence in the pandemic, an increase in the types of things we're seeing in the South now, in Florida and Texas and California. And we don't want to get ourselves in a situation statewide or nationally where we're having to lock down again because of a failure to deal with the public health issues. And so whatever we can do as we reopen to enforce, the basics of hand washing, wearing masks, social distancing, and most important, testing and contact tracing, an area that we've received very little leadership in nationally. We're not going to be able to take the actions we need to restore the economy. And so getting a grip on the pandemic is the first thing that we have to do to restore the economy. Yeah. We're not getting much leadership nationally on this. We're getting advice from experts, but we're not getting much leadership. And so fortunately things I think are somewhat better in Illinois, but we need to keep at it.
Right.
And then beyond that, I think we're going to need to continue stimulus for a while. We've just seen the small business loan program, the what is it called? The PPP program, which extends loans that are forgivable to small businesses. That's been extended. The calendar ran out on that very large program just a couple of days ago, and Congress just today, the federal Congress has enacted an extension of that very important program. So small businesses now can continue to apply for loans. I think there's $130 billion left in that very huge fund for small businesses. And that's an important one. And so I'm so happy that one has continued so that small businesses can continue to operate and hire and maintain employment, most important for people. So that's important. At the end of the month, of course, other programs like the $600 weekly bonus, if I should call it, to unemployment compensation checks. That'll run out at the end of the month. And so we may need to extend that depending on how the economy is doing at that point. Unfortunately, what that is a payment for people to stay home.
Right.
An encouragement or an incentive for people to stay home. And we can't do that forever. We got a pretty favorable for people that are unemployed and qualified for unemployment compensation, and a lot are receiving it now. Their income sometimes is exceeding what they made at work, the job they left. That's a good thing. It maintains purchasing power in the economy. But it doesn't, when things start to improve, when jobs start reappearing, then it's not much of an incentive to return to work if you can earn more for your family by delaying that, if at all possible. And so at some stage we need to change the incentive from paying people to stay at home through these subsidies to unemployment compensation, to providing some subsidies to return to work. And actually some Republicans at the federal level are proposing that. At some stage, that's probably a good idea to transition from one program to another.
Right.
So stimulus is going to have to continue for quite a while, and it's going to be expensive, but we need to do it.
Right. And like you said, the contact tracing and making sure that people really really understand the science of how this disease is spread. And I just listened to an interview with an expert yesterday on Fresh Air, and the expert was saying that yes, we need to do hand washing, but what they have found is that it's not living on surfaces the way we were afraid that it would. It's respiratory droplets. That is how this disease is passed, is respiratory droplets. So that's why it's important for everyone to wear a mask when you go in an indoor space. And I'm very happy to see that at least around Bloomington Normal, there's a lot of businesses that have a sign on the door that says you must wear a mask to enter. If you cannot wear a mask, then call this phone number and place an order over the phone, and we'll bring it out to your car. I agree with this, and I hope that more people begin to understand the importance of covering your face so that your own respiratory droplets aren't infecting somebody else. Because the other thing that we've learned is that this disease seems to be most communicable when you have no symptoms.
Yes.
Obviously, you continue to be communicable after symptoms, but we don't know yet how long people can be asymptomatic and be spreading it, and that's the biggest problem, is the asymptomatic spread. You think you're fine, but if you're going to go inside, cover your face. If you're going to engage in a conversation with somebody less than 6 feet away, even if you're outside, cover your face, because you don't want to get somebody else sick.
Yeah, that's an excellent description, I think, of the science of it, and so we really know, a lot of us, what we need to do, and why. It's the asymptomatic spread, and the knowledge that spreads through droplets that from breathing and talking and singing and all of that. That we just need to keep distance. We need to keep a mask on to reduce the spread, and we need to be able to identify those the people that don't have symptoms yet, that maybe have the disease.
Right. So that's one thing that the state of Illinois, I'm very happy that our state government is building up testing rather than taking it away. They are working on hiring contact tracers. I'm not only a Wesleyan alumni, but I'm also a University of Illinois alumni, and I just got an email yesterday saying they're going to be hiring 100 contact tracers for the University of Illinois. And that is the kind of thing that will keep our economy going, that will keep our schools going, because the cumulative effect of having all of these places closed, you're not just talking about the teachers and the students being able to go into the schools, but you're talking about all of the other support staff. What about the cafeteria workers? What about the janitors? You don't need all those people if we're not using our schools. And the same with some of our larger businesses. If we can't find a way to open our larger businesses, then there's just a whole other supportive groups of employees that are left out of employment if those places can't stay open and stay open.
No, that's exactly right. That's exactly right. And I'm fairly optimistic about Illinois. I think seeing the initial reaction to phase 4. We're getting people that are phase 4 basically allows us to return to some normal activities, but with all of these things going on, social distancing, masks, and so on. It's one concern of mine, though, is that we're not a closed economy. It's not just Illinois. You mentioned the University of Illinois opening,
Yes.
Illinois State,
Yeah,
Illinois
and
students are coming back from everywhere, and so that makes these things even more important.
It sure does. As we welcome our university students back, we've got to have testing in place for them when they come back, so we can make sure they're not bringing coronavirus back to Illinois from wherever
and the notion that we wear masks in Illinois, and
right.
Because the sooner we can bring this under control through these measures, the sooner we can open things up even more, phase 4 and phase 5. And then reduce these incredibly expensive stimulus packages that are just draining revenue from us.
Yeah. All right, Kelsey, are there any other questions or comments?
Thanks for checking in, Carla. There aren't any further questions or comments at this time. But again, thank you so much for hosting these town halls, and Michael, thank you so much for sharing with us tonight.
Thank you for having me.
Yeah, and thank you everybody for tuning in, or if you've watched later on YouTube, thanks for giving us a look.